work, but it was nice to meet you.
All right. Josh, make sure you start the recording. If you have that possibility once we start.
It looks like it already is.
Okay. All right, good morning, everybody. Thank you for joining the boot camp. We will get started here momentarily. All righty, good morning, everybody. Thank you for joining the ACA Small Business Boot Camp for this Tuesday, July 12th. I hope everybody had a great 4th of July holiday and 4th of July week. We did not do a session last week, so everybody could enjoy that week and with any activities you had planned. So we hope everybody had a great 4th of July holiday. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services at the Arizona Commerce Authority. And as we like to do with the Small Business Boot Camp, we like to start by thanking all of our community partners. We could not do these sessions, these webinars without them, without their time, their effort, and their expertise. And these two slides is a small sample of the 120 plus community partners that we have. Those not familiar with the Small Business Boot Camp, it is designed to help small businesses as they start, plan, and grow. It is a statewide initiative supported by all of our community partners. And not only is it the Tuesday morning 9 a.m. webinar, it is also a content library and a series of workshops we are doing. So let's talk about the content library. When we started doing the boot camps, we started by recording all of them. So those that can't make it at 9 a.m. can go back and view the webinars and get that content and that information. And over the last 2 years, as we've done these webinars, we've developed this content library of over 200 recorded webinars and presentations and workshops. And so it's a great resource available to you. There's no cost to view the webinars in the content library. And you can find it at the bottom of the Small Business Bootcamp webpage. So the same page you went to register for today's session, at the bottom of that webpage, you'll find a content library. And on there, you can sort by 7 different categories to help find the session that best fits your needs. If you're looking for something and you can't find it, feel free to reach out to us and we can guide you to a session or two that may fit those needs, fit the information you're looking for. So other programs that the ACA offers to help support small businesses are Small Business Services, our Workforce Division, and the Arizona MEP, the Manufacturers Extension Partnership. All these programs help support small businesses as they look to grow and scale their businesses in various different ways. Another program that we have is a Small Business Checklist. And this is designed to help those entrepreneurs that are looking to start a business or expand their business into new areas, identifying the commonly requested licensing, registration, and compliance needs at the local, state, and federal level. So with that, let's look at some of our upcoming sessions. We've got a great lineup through July into August. And we have our Habits for Successful Growth coming up, planning for the holidays. I want to really note that one because you might be like, the holidays, that's December, that's a long ways off. I can't believe we're already in July. And if you're for businesses, those of you know that if you don't start planning in July for your holidays, for your November and December sales, you're going to miss it, especially with the supply chain challenges we're having right now. So you want to make sure you stay tuned for that session and look at ways that we can help you impact your business looking at the holiday season. Then we've got delegation without pain, misery, and regret. We've got a new presenter, Tamara Kempton's going to be on that. We're excited for that session. And then managing teams and rebuilding and refocusing as well. One other note that's not on the slide because there's not enough room, but Thursday, August 11th, we'll be having our workshop in person with a Zoom option, but the in-person is the preferred method. It'll be from 9 a.m. to noon at our ACA offices. You can find that information on the bootcamp webpage, but it is a access to capital / growing your business workshop with Wells Fargo is going to be there. We've got an accounting firm. We've got a law firm. We've got the SBDC and some others to share tools and tips as you're looking to grow and scale your business, looking for funding and looking for other things that are needed as you grow your business. And so it's going to be a great workshop. The Phoenix Business Journal has a little bonus involved for those that are in person live. So please check that out. Again, that's August 11th from 9 to noon. So with that, we're going to jump into today's session. We've got a great speaker, Ruth Ellen Alinsky. She's the director of the Yavapai College Small Business Development Center. She's been on with us numerous times before. And the Yavapai SBDC is a phenomenal center. They are very successful at what they do. So we're excited to have her with us. So Ruth Ellen, I'm going to stop sharing and turn the time over to you.
Excellent. Thank you and welcome everyone. Excited to be here with you this morning to share a bit more about how to cut costs and manage your cash flow. So let me just pull up my presentation here. Do that, Robert?
Yep, we got it.
Excellent.
And as Ruth Ellen's getting started, if you have questions, please post them in the Q&A. You'll find the Q&A at the bottom of your screen. And then that will allow us to not lose those in the chat. We can use the chat for some interaction for questions that Ruth Ellen may ask of you. So.
Absolutely. I do want this to be conversational. So please do stop me intermittently if you need to. You don't need to wait till the end to ask your questions. So to kick off, I just want to give you a little overview of what we're covering today. So in this session, we're going to talk about cash flow. And I don't want any of you to feel intimidated. If you're not a financial guru and you're not an accountant, that's okay. That's why we're having this conversation. So it's really to talk about cash flow, why it matters. We're going to discuss a little bit about the time value of money, which kind of plays into cash flow a little bit, and the decisions you need to make on how to maximize your income and minimize those expenses. So we have some strategies to share with you today on how to do that. We also have a tool for you in making cash flow projections that we can share with you. All SBDCs, there are 10 centers across the state of Arizona, have access to different tools and resources, along with expert consultants that can assist in helping you with these strategies and setting you up for success. I'm going to talk a little bit towards the end about dealing with inflation. Obviously, this is a hot topic right now, and it does impact our businesses greatly and does impact the decisions we need to make about how to manage our cash flow. And then, of course, as I mentioned, happy to take questions at any time. Please feel free to put those in the chat and we'll get to them as they come in. I do have a small plug at the end about SBDCs and how to contact us and find the center in your area so you can access this really incredible resource if you haven't already. Right. So what is cash flow really? Cash flow is money transferring in and out of your business. It really is the flow of money. Cash flow is not your bank balance, and it's really important to know the difference, because your bank balance is how much money you have at any given time, but it doesn't demonstrate the flow of your cash. And that's what we're going to talk about today. Strategy for good cash flow is really about maximizing your income and reducing and managing those costs. And a lot of people may not understand what cash flow is, and that's why it's important to talk about this and kick off really with this conversation around the time value of money. So let's dig into that a little bit, because I actually talked with a colleague of mine about this before the presentation today, and gave a very clear and simplified description. And it's, the time value of money is really central to most, if not all, financial theory. And again, you don't have to be an expert in finances to understand the importance of the time value of money. And it means exactly what I have here on the slide. A business should strive to have incoming cash flows as large as possible and taking place as soon as possible. And outgoing cash flows should be as little as possible and as late as possible. So of course, without upsetting anyone, right? You don't want to be late on your bills, but you also want to take advantage of the terms that are provided to you. So to reiterate, incoming cash flows are exactly that. It's when somebody gives you or your business money for your product or service, versus those outgoing cash flows, of course, are your expenses, the payments of your bills, the purchase of materials and supplies. And so this cash flow scenario is really the interaction between those two things, the ingoing and outgoing. I want to just pipe in with an example. So let's use a credit card. So let's say your statement cutoff date each month is the 15th, but the payment isn't due until around the 10th of the following month. Well, I pay off the balance each month on my credit card so that I don't have that finance charge, but I wait until almost the 10th, if not on the 10th, to make that payment. So I'm waiting as long as possible to pay that bill so that I'm keeping as much cash as I can on hand for as long as I can before that bill is due. And this is going to apply to many of the strategies we're going to talk about today. Is you want to receive that cash as much as possible and keep it as long as possible so that you have money to work with in and on your business. So let's talk about why cash flow matters. This is also really important. I would say, I found some statistics to share with you this morning. 61% of small businesses regularly struggle with cash flow. And I can say, coming through our center here at the SBDC, we work with a lot of businesses who struggle with it. They don't know exactly how to get their cash flow in order. And part of it is projecting, but part of it is also just knowing what is required and how to push out those terms as much as possible. 82% of business failures are due to poor cash flow, and we hear some of those examples from time to time as well. 43% of small businesses have been at risk for not meeting payroll, which is very stressful. We understand that. It can lead to the 69% of small businesses who have been kept up at night. Well, we want you all sleeping, okay? We want you to sleep soundly and know that the cash flow is running well through your business so that you don't have to worry as much. So how do we maximize income? We're going to jump right into some strategies here I wanted to talk with you about. We maximize income, and this is not an inclusive list, and maybe you have some other ideas as well. But again, the idea here is that we're really focused on improving income. So offering discounts in sales, we see this a lot for seasonal businesses, right? Or for example, a retail store that may have clothing. They, by the end of the summer, they have sale racks of all their spring and summer clothing. They reduce those costs to just move that stuff out of their inventory so they can start fresh with the new run of clothing for fall, right? And they do that through these discounts and sales. And that can improve your cash flow because instead of holding on to that inventory, people are giving you money that you can move into paying the bills for the new fall selection. Selling gift cards and certificates. I do want to touch on the gift card piece a little. These are really a great way to receive free financing and generate cash flow because you receive the money today for a product or service that actually you're not delivering until some point in the future, which is to your advantage. The caution here is during a time of inflation, such that we are in now, it's best to issue the card or certificate in cash and not the product or service itself. So for example, if you issue a gift certificate for an item like, let's say a pair of sunglasses, I'll give you a free pair of sunglasses if you come in to the store. That item may be worth $10 at the time you issue that gift. But in 2 years, let's say the person finds that gift certificate in a drawer and they come to retrieve the gift, and the gift is now worth $30. But at the time you were thinking you were just giving a $10 gift, right? So it's much more advantageous for you to issue the certificate in a dollar amount value, and certainly to consider putting a deadline on those kinds of things, like this must be used by such and such a date. So good to think about that before using that as a strategy. Next up, we have expanding or pivoting your business. So offering new products or services. And we certainly saw an incredible amount of businesses having to pivot over the last couple of years. The way I look at this, though, is really it's diversifying your business. We've all become incredibly savvy, looking at our business in different ways, finding new strategies for not just creating new products or services in our offerings, but also how we deliver those services. And that's really important too, to think about. Your pivot may not just be the product or service, it may be the way in which you're delivering it. And by diversifying, we're also then welcoming new clients and potentially hitting markets that we haven't hit before. Again, great strategy for maximizing your income. Reviewing your product and pricing. I don't think we do this enough. I've seen a lot of businesses that are not charging enough for their product or service, especially now, given the inflation scenario that we're in. It's really good to review your pricing regularly and make sure that you're charging enough. Costs a lot to run a business, and there's a lot of costs like insurance and payroll and taxes. Those things need to be reflected in your prices, and it's good to review that from time to time. Again, another great example of a way you can utilize the SBDCs. We have consultants that can work with you on making sure you're charging enough for your products. And then the final one, work with customers to schedule past due accounts. This is really important, whether you designate yourself or a member of your team to spend a couple hours a week making those calls and making sure vendors are paying you on time or customers are paying you on time. And if they're past due, coming up with strategies for them to pay you on time. Maybe it's if you pay within the 30 days, you get a 5% discount. Incentives like that, again, keep the cash flow moving through your business, and it cuts the time you need to take following up with people all the time, right? It's very easy for us to want to be the friend and want to be the friendly business owner, but in reality, we really have to sometimes put up those boundaries and really be sure about our due dates and find strategies to get people to pay you on time. Similarly, we also want to minimize expenses, right? So the first thing I wanted to talk about in that is just prioritizing our spending, which I just touched on a bit. What are those necessary obligations and what's discretionary? What has to be paid first and what comes kind of towards the end if we have the money to spend in these areas, right? So necessary, obviously, our lease or our mortgage, the payroll, insurance, taxes, all of those we have to come up with initially, right? Or first. Those are the first payments that we need to make. The discretionary side are things we have to kind of decide at the time we're looking at how our revenue looks. And I started marketing there because I do think that is debatable, right? It could really be a necessary item depending on the stage of your business and where you are at as a business. And also if you've budgeted for it. a big thing with marketing, I think, is if you feel like it is a necessary expense, then create a budget and say, okay, I have X amount of dollars to spend this year. And then again, you're going through a prioritization schedule and how you're going to spend those marketing dollars. Additional ways to minimize expenses and eliminate unnecessary costs, which is kind of those discretionary items that we saw on the right-hand column. Accounting for new or additional costs. Have you thought about, maybe you have pivoted your business, but maybe that has also led to additional costs in purchasing materials or product. And have you, thought about what that's going to do to your future cash flow? Another big piece that businesses need to be thinking about is if you received an EIDL loan, those payments are going to be coming due here soon, if not already. And have you accounted for that new expense in your cash flow projections? And again, I mentioned cash flow projections because it's really important that you are thinking at least 6 months ahead. Move your credit card balances to zero rate cards. This is also a really great strategy if you do have higher credit card debt. And while there is a fee, this may be a short-term solution for saving some of the interest that you would pay on larger amounts. And while there is a fee, like I said, it might be less than what you'd be paying over the year in interest rates. And the final one I want to mention is one that I think is important because in business, a lot of times we have multiple cards, right? We may have multiple credit cards. And I'll give the example, you may have a credit card with a higher interest rate and it has a lot more on the card. Let's say you've got $8,000 on a credit card with a high interest rate. And then you have another card with a lower interest rate that only has $1,200 on it. And you get a windfall of cash and you're like, I just want to simplify my life. I'm just going to pay off the $1,200 card. Well, that's really a disservice to you and your business because while it may feel like you're simplifying your life, you're actually going to be paying more interest on that $1,200 that's part of the $8,000 card. And so it will be more strategic to just pay down the higher interest card first and leave that lower interest card alone. So some other ways to manage cash flow here. Selling assets. We're coming out of the pandemic again because of the pivots or changes in business. We're doing business differently. Maybe you've moved, primarily online. Maybe you have a piece of machinery that you no longer use. There's a lot of scenarios here where you may just have assets or be paying debt on an asset that you no longer use. Really important to, look at what you have and if there's a way to kind of sell off or get rid of things that just aren't needed anymore. And again, that just relieves you of the debt maybe, or also brings in some cash that you can use for marketing or some of those discretionary items that you don't have money for now. Lease versus buy. I do want to talk about this a little bit. This is another debatable strategy because in the short run, of course, it does free up more cash flow if you're in a crunch. It's a strategy if you're really in a crunch. In the long run, of course, it makes more financial sense to buy, whether it's an asset or buy your commercial property or what have you. Monthly payments are often less when you're leasing, but again, it's really more of a short-term solution because in the long run, you'd want to be putting your money into an asset and building the equity of the business. Managing inventory. So utilizing these kind of just-in-time practices and making sure you don't have inventory just sitting around. And again, this is a fine balance because we recognize that a lot of times when you purchase in bulk, you get a lower cost, right? And so the initial thought is, well, I'm just going to buy a bunch of it and then I'll have it and I won't have paid as much for it. But if you're sitting on inventory, whether it's materials and supplies or products itself, you know, if you're sitting on that for months or years, it's really a disservice to you to be holding on to that inventory. So it may be better to pay a little bit more for it up front and then not have it on hand, freeing up that additional cash for other things in your business. And again, this is the balance, another great opportunity to meet with a consultant to talk about what is the best scenario for you and your business. Speak with vendors and lenders about payment deferrals. You know, vendors, you can negotiate with your vendors. If you're at 30 days right now and you've been paying on time, maybe you can ask to extend for a short period of time to 45 days. And again, that's just that game you play of keeping your money in your business longer. Maybe during the slower times of the year, you can extend those payment due dates and the terms of your arrangement so that you have that money longer. I discussed the pay with automatic funds transfer when I was talking about that credit card example. You know, if you can, again, extend your terms, let's say you move from 30 to 45 days or 2 weeks to 4 weeks, whatever the case may be, and then you do an automatic funds transfer on the day that it's due, you know, you're still paying on time and you're also keeping your cash as long as possible. And then securing short-term credit if needed. Some examples of short-term credit would be a bank line of credit, supplier financing, so you're getting it directly from the supplier, and of course, credit cards, which we talked about. I do want to take just a moment here with a mention of securing short-term credit. You know, if you're a cyclical or a seasonal business, cash flow management is really tricky. An example may be, you know, a toy store which starts accumulating inventory in the fall to prepare for the holiday season. And this means that you're making a bunch of purchases before the cash flow actually starts. So a line of credit would be helpful in this scenario where you could use that line of credit to buy all the product in preparation for the holiday season. Well, the caution here is that banks are known to often withdraw those lines of credit right when you need that money the most. So we've heard of businesses where their lines of credit were canceled during the pandemic, despite them having paid their bills on time and always following the guidelines and rules of their credit. But the banks also like to limit their risk during a financial scenario like that which we experience. And so you have to be prepared for that. And that again can be put into your projections and being ready for that money not to be available. So the lesson here, of course, is just being prepared and making sure you understand that that is a possibility. Okay, and this is where I have mentioned a couple times preparing cash flow projections. Maybe you've never done this before, and that is totally okay. Or maybe you are current on making those projections and kind of knowing what your budget is for the year. The big thing here is you have to keep your books up to date. It's so critical to your business to know where you stand and understand the cash flow. And again, if you're a seasonal or cyclical business, it's even more important for you to understand those ebbs and flows so that you can properly prepare. I tell clients all the time, it's okay if you are not an accountant or this isn't your specialty. The key here is that you need to really be doing the things in your business that you do well and that no one else can do. So keeping your books up to date is definitely something you can delegate out to an accountant or a CPA or a bookkeeper on your team, whoever that might be. But again, it's so important that you keep your books up to date and that you do cash flow projections at least 6 months out and you understand what is coming. What does the future hold here for my business? Where can I plan for shortfalls in my cash flow? Again, that might be the short-term financing option, It might be selling off some of your assets and just keeping a little pool of funds available for yourself. It might be some other strategies, but very important that you have projections put together and understand what's coming and that your books are up to date. And if you need help finding an accountant or CPA or a bookkeeper, the SBDCs can assist you in identifying somebody that can support you. Okay, the dark slide, dealing with inflation. Let's talk a little bit about that. I would be remiss if I didn't talk about it today, given our current situation, right? So, I mentioned this. I think dangerous is a strong word, but it can be very, very scary for our businesses, but just the economy in general. Inflation leads to distortions. It makes people very uneasy. It makes business planning very difficult. So this is a great time to be talking about cash flow because we have such a, because inflation is such a hot topic right now. So there are two ways to deal with inflation: reduce costs or raise prices, generally speaking. From a cost standpoint, we should always strive to be efficient, right? It shouldn't just be in times of inflation that all of a sudden we're trying to cut costs and manage our cash flow and all of those things. We should be trying to do that all the time, regardless of the inflation rate. Raising prices is also an option. And we talked a little bit about this earlier. You shouldn't be shy about raising your prices to preserve those profits and preserve your profit margin. So pricing power, this pricing power term is related to the value that a customer perceives to be gaining by purchasing your product or service. So two ways that businesses can increase your pricing power is through the quality of your offerings and backing up your offerings with maybe exceptional customer service. I talk about this a lot with my clients. If you think about what your differentiating factors are, what makes you different from others in the market, what makes you better than others in the industry, could be attention you give to the customer, a higher quality product, maybe you're using really high quality materials, maybe you give a guarantee on your product or service. Maybe you have a story to tell. How did you come to be a business owner? What's your story? The social causes or nonprofits that you support with the profits that you make, or maybe you support a social cause with volunteer time, or you encourage your staff to volunteer. That is a story worth telling, and it adds value to your product or service. So with so many businesses now found digitally and online, telling your story and adding value to your product or service is really important right now. And so it can be a way to kind of justify the increase in prices should you have to move in that direction. So something else to think too is, during this time of uncertainty, it could also be a good time to increase your marketing with an emphasis on this new value proposition, or the value to your customer that they're getting by purchasing the product or service. That said, inflation, it has a lot of accounting implications. I am not an accountant. So I always encourage conversations with your CPA, with your accountant before making any major financial decisions. They have a better view of your whole financial picture to help you make those decisions. But these are considerations right now, given the current situation. Okay, and I wanted to bring up a tool that we use here across the Small Business Development Center network. It's a program called LivePlan. It's a business plan writing tool that also has this really great financial forecasting section. It's very user-friendly, and as a client of the SBDC, you can access an account at no charge. So something to consider as you think about how you might start creating cash flow projections or focusing more on your cash flow, not just your bank balance. And I'm happy to talk with you more about this tool and ways to utilize the tool in making cash flow projections and really understanding your numbers. And again, you can use a tool like this and not necessarily need financing or not necessarily need to write a business plan. This is just simply diving into your numbers and understanding what your income is, what your revenue looks like, what your expenses are, and how that relationship works. It also does have a cash flow statement that it creates through the program.
Hey, Ruth Ellen, I saw that Pam on here raised her hand. Pam, if you could type your question in to the Q&A, we can jump in. So,
excellent.
And I see she put in the chat, I had joined the meeting about a year ago. Was asking about a different planning tool. There's lots of, and Ruth Ellen, you can talk to this as well, but I know there's lots of different planning tools you can access. There's some free ones on the internet and different places. I do like LivePlan. I've worked with the SBDCs and looked at it and used it. And it's a really good tool, and there's a lot of other benefits to using that, but I'll let you jump to that.
Yeah, honestly, this is just one example. And the only reason I bring it up today is because I'm very familiar with it. It's one that I use with my clients. But I will say that there are many tools out there that can be used. I know other SBDC analysts have a variety of tools that they use depending on the client. Some are still using like this kind of Excel spreadsheet with the formulas in it, where you can put in your current numbers and utilize that as the tool to look at your cash flow. There's also just simple cash flow tools that are available online. I would just recommend you talk with someone about it, either through the SBDC or your accountant or CPA, to see what they recommend given your industry and your business. But we're happy to talk with you about different tools besides the LivePlan tool.
So we got two manufacturing related questions. One is about LivePlan. It says, is LivePlan robust enough for manufacturers?
I have used it with manufacturing companies. I would need to know a little bit more about the business. So reach out and I can weigh in on that specifically. But yes, I have used it for manufacturing companies before. It does have areas for direct costs and inventory and all of those things.
And then tying to manufacturing, Charlotte asked in the chat, she said, this is so helpful, but I'm wondering about strategies to manage large upfront manufacturing costs when there's a long lag time before getting product and selling the product.
So that sounds like you're spending a lot of cash before you actually start generating revenue. Is that what I'm?
That's what I'm thinking. That's what it sounds like.
Okay. Any other questions?
So what would be some strategies to help Charlotte with that on having that large upfront cost?
Yeah, well, I mean, the first thing that comes to mind is the line of credit if she doesn't have one already, which is kind of the low-hanging fruit there. That's a challenging scenario, and it would probably require a deeper conversation on the broader business and how it, I don't understand the business enough to, I guess, give an answer right now. But I'm happy to meet with you to talk about it.
Yeah, and Charlotte, I also know that, you know, with manufacturing, as you're buying that stuff, as Ruth Ellen mentioned in her slide, that line of credit or those payment terms with your vendors can be extremely important, because if it's going to take you 30 days to manufacture the product, you know, and hopefully get it sold within a couple of weeks after that, then that 45 day period for the materials may be what you need to on the payment side of it.
Yeah, and then the other thing that comes to mind, again, I don't want to make assumptions, and but something that does come to mind would be diversifying the product line so that you have a product that is produced more quickly and generates revenue more quickly, in addition to the product that takes longer to build and produce and sell. And so that's where diversification is really important in manufacturing, because you want to have different products if you can. I understand that this may not be a fit for you, Charlotte, but this is what comes to mind is as a strategy, is making sure you're diversified enough to have both the longer term, probably larger product, takes longer to make or produce, but generates more income with some of those smaller items that are easier to produce and generate cash flow for you as you're producing the other items.
And then Pam asked again about the confidentiality of the information. Pam, when you're working with the SBDC, it's all kept confidential, including LivePlan. So I would encourage you to reach out to your local SBDC or Ruth Ellen and go from there. All right, we had another. I'll let you jump back into wherever you're at talking about LivePlan and your slides.
That's fine. And if there's more questions, just let me know, Robert. I'm happy to do that. This is just my recap here. So again, important to know how your cash flow works. You want to really focus on maximizing that income and reducing your costs, securing credit if you can and if it's needed, and knowing the implications of that. Identifying ways to optimize. So whether that's, negotiating with vendors to push your timelines out, to paying just on the date that it's due, and making sure to add value if you're going to increase prices, and tell your story. We have so many great small business stories across Arizona, and I don't think we necessarily do the best job at that. And you all have a story to tell, and it's important to share that with your customer. Be sure to prepare those cash flow projections for a minimum of 6 months. And then, as I mentioned, contacting your local SBDC office for assistance and expert support. And I do have an SBDC slide here next. Maybe should have done this a little sooner so you all had a better idea of who we are. The Small Business Development Centers, there's 10 across the state of Arizona. And the very first bullet there, it's no cost, confidential consulting services. So your information is never shared. This program is funded in part by the Small Business Administration. So it's really your federal tax dollars at work, which is how we're able to offer these services at no cost to you. The network is full of really incredible experts in a variety of fields. So we leverage those other centers all the time to find the right fit for you, depending on your industry and what your needs are. And we have a unique partnership with ACA. You didn't know that already. So we work with Robert and his team all the time on disseminating information, providing trainings and workshops and webinars, and just sharing information and resources with small businesses across Arizona. And I did mention we do leverage those other centers. We have a lot of the business analysts have been or are entrepreneurs and small business owners themselves. And so it really helps, I think, build connections between your consultant and you, because we all understand the ins and outs of entrepreneurship and building a brand and maintaining your business. And this is our website here at Yavapai College, where you can register for our services. You can also access additional webinars and trainings that are coming up in the future. All the centers host a variety of workshops and trainings that may be of value to you. So be sure to check that out. And then this is my team and my contact information. and I am happy to take any additional questions. Please feel free to reach out. Those of you that maybe I didn't answer your question in the way that you were looking for, please don't be discouraged. Just reach out to me so we can talk further about your scenario and how we can assist you.
Excellent. Thank you, Ruth Ellen. We do have a comment from Robert in the chat, and he's working with the SBDC and just saying how invaluable it was. So thank you, Robert, for those great comments.
Excellent.
And for those that are concerned about the confidentiality, as close as I work with the SBDCs across the state, they do not share that information with me unless the business gives approval to talk with me about their business. And usually it's because I'm there sitting with them as well, and I'm meeting the business for the first time. So they will not share your information. They are very, very strict about that. It's a piece that's part of the baked into the SBDC program across the country. So it's they definitely keep your information confidential between you and your analysts. So don't be worried about that.
There's another excellent comment in the Q&A from Kevin Connors, going back to the gift card conversation that we had early on in the presentation. So he says when he was a photographer, he did a lot with gift cards and certificates, and he found it very important to print directly on the cards, quote, no cash value, one per customer, valid for 1 year from date of the certificate, which I agree. Any kind of fine print you can put on there to just clarify how that certificate can be used can save you in the long run.
Well, we got a couple minutes left, so if you have any questions, please put those in the Q&A, bring those up. We do have a comment from Les Smith. The recordings of this webinar and the prior webinar will be are hosted on our Small Business Bootcamp website. We will post that. Josh will post that in the chat here shortly. He just did. So there's a link in the chat where you can find the recordings of the different web bootcamp sessions. Today's session will be posted later today. So there's that information.
Yeah, and just I wanted to go back to Charlotte. She did put in here line of credit, vendor payment terms, and diversifying revenue are all potential ways to cope. So I'm glad that was helpful, Charlotte. And again, please feel free, Charlotte, to reach out, or anyone, reach out if you have questions or if you have thoughts after the presentation today that you wish you had asked or mentioned. We're happy to address those at any time.
Excellent. So with that, we will go ahead and wrap up early. We'll give everybody a little bit of time before the next meeting. You may have a 10 o'clock meeting or a 10:15 or 10:30. You get a little bit of time to catch back up on stuff, but we want to thank everybody for being with us today. We hope you got a lot out of this. And again, we want to thank Ruth Ellen for her presentation and the great insight that you shared. And with that, we will go ahead and wrap up, and we will see you next Tuesday for our next boot camp.
Thanks, everyone. Enjoy your day. Look forward to hearing from you. Bye-bye.
Have a great day.